Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the foundation for the study of cycles. My name is Lars von Thienen. Once a week, each Monday, same time, same place, we will discuss cycle analysis. Today, as promised last week, I will have a look at the crypto markets with a special focus on Bitcoin versus US dollar and just a quick look on Ethereum. So what's up there? Today, dedicated crypto Bitcoin. Next week, as promised also last week, we will have a look at the Forex markets. So next week, Monday, please join here to have an update on the US dollar and the euro. Next week, Monday, and the week after, between Christmas and New Year, we will have a special look at energy cycles, energy markets, oil, gas, and this specific. So this is what I promised last week. We start today, this Monday, each week, one asset class. Today, the asset class is crypto. Next week, Forex, US dollar, euro. The week after Christmas on Monday will be on energy market. That's the deal. That's we discussed last week, Monday. So let's get into crypto. Before doing that, I need to make an announcement. I think you are aware of that this is a special week at the foundation. So on Thursday this week, we will host the Seasonality in Markets and Nature webinar, which is free for you. So please join, meet Jake, meet Ray, meet Ron, while discussing three special subjects in regards to seasonality. I mean, in general, you know that December is a special period if we talk about seasonality. You know from my cycles review last week that the dynamic cycles are against the seasonality, at least in the stock markets, but this we discussed last week. Please join this week, Thursday, to follow Jake, Ray, and Ron, having a special look at the seasonality. If you have not joined or registered, please move over to cycles.org. You will find the blog post there. It's free, so at least register and you will get the link for your replay, at least if you have registered here. Highly recommended. My colleagues will be there for you hosting this special session. And we today won't focus on crypto. So we will jump into the cycle analyzer. By the way, we are live today, so I will monitor the chat section. If you want to discuss related to crypto, to Bitcoin, to the cycles, I will show you in a second. I will have a look at the chat, and at the end we can pay attention to your specific issues, as this is the purpose for today. Okay, moving over to Bitcoin and our cycle analyzer here. So let's clean up the chart first. The range here. So this is the weekly Bitcoin series. Let's start with the weekly, the long-term view on Bitcoin. So just to see where we are, this is a weekly chart with a very long historical view going back, at least the date we get here from our data provider we use here for Bitcoin versus US dollar, weekly chart going back to 2014, which is a long-term view on this data set. However, we need to take into account that this is not really much data if we now apply cycle analysis. And that's important. I need to mention this upfront before we try to read the values from our cycle analyzer using a weekly data set, which gives us around 500 data points going back into 2014, at least using the weekly series here, has to be treated with care. One basic rule in cycle analysis is if you want to reveal the current dynamic time cycles in the data set, you should have at least 3 times of the longest cycle you want to detect in your data series. So for example, if we want reliable detect cycles with a length of 200 weeks, in that case, we should have at least 600 data points in our data set. So 200 multiplied by 3, we arrive at around 600. So this is the minimum of data points we need in our analysis in order being able to reliably detect this cycle length here. So that's at least important if you don't have that much data. While the scanner will output the spectrum anyhow, you just need to be careful. Cycles above that offset might be shown by the result of the spectrum analysis, but should not be trusted just per se. So that's just the knowledge you need upfront here. And you see what happens to this spectrum. At the bottom here, you see now the basic spectrum just applying to the weekly Bitcoin series. We have several peaks here in the shorter time cycles. And we have, at least from the basic reading, one peak here at around 179 weeks, which is on the edge of being trusted based from the calculation I showed you. Through 180 multiplied by 3, you arrive at around 500 something. So we should have at least 500 data points, but we just have 474. So that's why I said it's more or less on the edge here. Everything on the right, you see, is not really detected anyhow. So we have a plateau here. Everything above 200 something looks like it's in plateau here. So there's mathematically a small peak, but you know from previous analysis, you should not trust this peak, even if it's a peak in the spectrum and it's listed in the table. You can ignore everything here above 200. Reason 1, we don't have enough data points here. Second, it's just a flat plateau. So the first one which shows up is 179. Okay, we can use it. Anyhow, we need to be careful as we have not enough repetitions in there. It's at the edge, that's what I said. So let's start here. So this is, and from the amplitude, so the offset between this amplitude and this amplitude, so there's a high difference in the amplitude offset. So that's why I would recommend to start with this cycle here. It has a green triangle, so the Bartle score is around 70, which is a very good Bartle score. And the strength, if you look at the table here, we have a good strength score of about 56, and the other ones are just in the range of 60. So I would count the strength of this 179 cycle is similar to the other ones, to the 3 shorter one cycles here. So this is the best cycle to use on the weekly series. By the way, if you want to get a clue on analyzing the strength here, one method I'm often using is here. You could draw more or less a line here at these tops here, and if the peaks are more or less they are proportional lying at this line here, which is more or less an indication that the strength score here is quite similar. Yeah, you see they are all around 60, which means it's the same by visually just connecting the tops here with a line. So if this is the case, the strength of this cycle here is more or less the same as the strength of these cycles here. So you can see here, this is not at the line, so this is the strength is very low. This is very low, but all peaks lying on this line here will have the same strength. Yeah, so that's the reading, and that's why the strength is everywhere around 60 here. So we could use this cycle here. It has the same strength, even though it's higher amplitude, and the Bartle score is good, and it's the longest cycle to start with. That's always the procedure you should apply here, starting with the longest peak, which is then giving you an idea about the long-term situation we are in. So we select this cycle based on the reasoning we click on the peak here, which gives us the overlay of this cycle here. So, and now first, you see what I explained from a mathematical point of view. You just see these 3 repetitions here, or 1, 2, 3, and a little bit more, which means that what I explained, we are on the edge with trusting this cycle, because only having these 3 repetitions in the data is quite really the minimum you really need to use it. So, and as we have, the stretch of the price of Bitcoin, you know, is very high. So we have at a minimum 2 parabolic moves here in this data set from 2017 and 2020. So it includes 2 parabolic moves, which makes any analysis on this data set quite hard. So here is the parabolic move 1, and here is the second parabolic move in this data set. And parabolic moves are anyhow quite hard to analyze with cycles. So I explain this topic because using cycle analysis in this kind of data set is not easy. We have 2 parabolic moves in this data set, which distorts the cycle analysis. But it's detrended anyhow, but detrending a parabolic move is not easy. And that's the best we can get out of the weekly cycle analysis. And just having this in mind, and you should be, we cannot use this cycle on its own. So I mean that's more or less the clue based on what I explained. We should never use this single cycle here based on the reasoning I gave you on the length, the minimum offset, the parabolic data by itself. So okay, we have a timing projection here, which is interesting, as from the long-term perspective, we are now approaching this low area. We have left it since October, and it's projecting at least a longer-term period in time with upward power from the cycles view here, from a long-term projection. I mean, you see the swings which could happen in between, but we are now entering this long-term projection into at least for the next year, for the full next year. Yeah, and the swings of the past upturn, if we want to show them here, it's then this upswing here, that's from the first up run here, the second upswing which took place here, and we are now, at least from the weekly, in this third, which is projected. We don't know, but at least it's projected for this period here. And by the way, what I'm now doing to analyze if this is more stable analysis or not, I will move the endpoint of this analysis, which is in this case here, we are talking about today or the Friday data set we have from Bitcoin from last week. We can now move the end of this analysis more into the past and see if the outcome or the projection is more or less stable and the same, or if it will flip around by switching the end date of this analysis. In the case the cycle analysis will jump around, you can throw it away and we don't get any reliable output. If we more or less get similar, or the nominal cycle lengths will stay the same while slightly changing now the endpoint, then it's another measure of the valid analysis here. So let's do that. Let's click on the endpoint analysis. Let's go back, for example, somewhere in January this year, where we reached this low point here. Let's update the cycle analysis. So the light blue data you see here is not taken into account by the cycle analysis, while the dark blue data is taken into account the in-sample period. For sure, we now shorten the amount of data we have for our analysis, so it gets more and more critical using this kind of analysis. But using this data, you see here, we still have the cycle of 173 weeks, which is close to the cycle we just had 7 months later. So this is January this year, switching from December this year, which we did previously. So let's check if it's the same phase. So if we would have applied this analysis back in January, the weekly period here. We would have seen this projection here, which will go into September this year. And we can see how it works out. And this is more the same long-term projection, even though if we update now the end date to the current point in time, which I will do here, so just compare 173 weeks, and I will now update the analysis. And this one, so the cycle, based on the principle of variation of cycles, they never stay static. But you see here now it has changed into 178 weeks. That's what I said. I would say this is the same as having 173 weeks. So the nominal cycle stayed the same. And if you check the phase of this cycle, the phase is also the same. While the January cycle projected the low in September, and even though the length changed slightly towards 178, but the phase projecting the upswing here is the same. So we would have got the same long-term results from Bitcoin long-term perspective if we did this in January or now in December, looking into a more upswing cycle from the long-term Bitcoin analysis. Just I see in the chat the question, how do we get access to this cycle analysis? So let's also quickly answer that question here. So this cycle analyzer is available to all members of the Foundation for the Study of Cycles. So if you become a member of the Foundation, you will get direct access to what I'm doing here. So if you're interested in just repeating the analysis on your own or analyzing other assets, this is the value add you have as a member of the Foundation. We offer 2 membership levels. The basic one allows you to analyze daily data. So this is more or less the basic what we are doing here once a week. You can do this on your own on the different assets, and the more professional version if you're interested in intraday. So, but Hardik, at least that's the answer. You are invited to become a member of the Foundation to repeat this. So that's the weekly analysis. Now let's switch to the daily Bitcoin cycles or daily crypto cycles to see where we are looking at the daily cycles of Bitcoin. So therefore switching to, let's clean up it here first. So that's the daily latest data of Bitcoin. Moving back now on the daily chart here into 2017 in dark blue, which means I will start with a very long-term analysis. So now repeating, now we have a complete different view in regards to how much data we use here for our analysis. Starting with this long-term analysis takes into account over 2,000 data points daily, so trading days from the Bitcoin data set here, which is normally too much. So this is an historical analysis on a long-term daily data set. This should not be used in short-term projections going into the future, but you could use the long-term analysis on a daily chart, so using this huge amount of data points here to get a clue about the average dominant cycle length in the past. That's important what I said here. So the average dominant cycle length over the last 5 years. This is what will be revealed if we put this amount of data into the cycle scanner. Yeah. So you always need to have this understanding what data we put into the scanner and how to read or interpret it. So let's start with this huge amount of data points. This is the spectrum here down below as a result from this scan here. And the procedure is always the same. I think you see clearly 2 peaks in this long-term analysis here, which we then should use in our analysis as an offset. You see these are also here in the table on the top. So the strength of these 2 data points is similar. And that's, let's do the same procedure as I introduced it to you. So if you connect these 2 with the line, it's more or less this here. So you see that this line, these are more or less the similar strengths here, 12 and 13. Here's the 12 and 13. So there's also 269. Yeah, it should close to this. you see it's more, this is the 40 cycle here. So if you draw a line here, so this is then, so these 3 cycles more or less have the same strength here using this simple line drawing. But it's just a quick test I'm using visually to identify the strengths, if the strength is similar. And that's especially important if you build a composite. So if you build a composite, you should always use cycles which are proportionally related with their strength. So that's what I said. If we could use these 3 cycles here if we want to build a composite, because their strength is similar or proportionally related here. But let's start with these 2. I mean, this is, if you don't have any clue out of the markets, this is the one to start with. If you have at least a clue what happens in the market, you would go with a 200 and maybe disregard the longer term cycle here. However, the outcome is more or less the same. So let's assume you have no clue which cycle to use here on the daily chart. You need to switch between these 2 around and see if there is a change in projection analysis. So I'm just starting with one cycle, 198 days, so a 200 days nominal cycle here. And I will now switch then between the 296 day cycles. So I will, and let's zoom in a little bit. You should now have a closer look into the projection area. So I will just highlight the current projection is having the low, let's draw it that way. So the low is somewhere here. And if I now deactivate this cycle, I need to be careful. It will then go out of sync here. So let's clear it. In February 2023 is the low point. Let's clear up and let's then switch to the 296. The low here is in March next year. But from a daily point of view, that's what I said. They are very closely related. So this one here is the low in March, and the shorter one had the low in February. So both cycles are the 200-day cycles is bottoming here, and this one is bottoming here. So the time in question is just the period between February and March, but latest after March next year, both cycles switch into the upswing here in alignment. So, and that's what you can see if you build the composite of these 2 cycles here. That's the composite is then at the end of February. I'm just switching between these cycles because if you would see completely different projections, that's what I'm checking here. If I see similar projections, so both are projecting the low February, latest March next year, it's the same. If they would have completely from their phase alignment a different projection, so for example, the 300-day cycle would project the top and the 200-day cycle would project the bottom, they would eliminate each other, maybe resulting in a flat projection. So we don't have any real time cycle projection from both cycles if they eliminate themselves. But that's not the case. So they support each other, and in the end, it doesn't really matter which one to pick here. So that's the composite based on these 2, which, by the way, you see here, and that's why we're talking about timing. Yeah, we are not talking about absolute price projections here, as we know that into this period, we anyhow had a strong long-term downtrend cycle into the period of October. So at least here, it introduced the drop here from 21,000 into 16,000 here. From a timing perspective, this was really nice. So the upswing, this was more a sideways movement. We have seen from the latest low here into this period. So the upswing period of this cycle here, this is the upswing period, just reduced in the side waves, and then boom, another move down, and as we before, so down, sideways, down. So this is the interpretation from the previous time projection we are also seeing here. So the upswing cycles, and this is, by the way, which I did expect here in January. I did a Bitcoin update here in January this year, where we saw exactly this bottoming cycle here. And I did a mistake at this point in time. If you remember the projection we did here in January, I did project that there's an important low in the markets, which, to be honest, was true. So as we're talking about time cycles, so this was a major low at this point in time here, still until May. So again, but instead of moving up, so the expected outcome would be an up move, but instead we just saw a sideways movement of Bitcoin during this projected upswing here. And once we reached this point in time in May, June, we moved down into this area. So it looks like, and I've not taken into account the long-term cycle, and I've not did a combined analysis with the other long-term cycle, which would have shown us. So the combination at this point in time, they averaged out each other. That's what I told you, looking into the period of February, March next year. Here they averaged out, gave us this major low projection here. Then again, a sideways movement. So it seems like upswing cycles in crypto could be ignored. So at least that's the winter period. But now the point I want to make for today's session, so you already listened for over 20 minutes for this analysis. The long-term analysis has already moved up into early 2024 weekly cycle. The short-term cycles, both the 200-day cycle and the 300-day cycle, now start to turn into their upswing period February next year. So, which means that at least we should wait December, January, but then from February into summer next year, so February to summer next year, we have a different situation than this year. So this year, the long-term cycle pointed downwards into October this year, while now we have the long-term cycle projecting upwards and the daily cycles also turning upwards starting in February. So December, January could be, from a timing perspective, a good timing opportunity to see an important low in crypto, at least Bitcoin versus US dollar. That's the takeaway from today's Bitcoin analysis. So at least from using the asset class of Bitcoin, we see an end of the longer term downward cycles projection, which from the long-term view happened already in October. Still, we need to wait for the daily cycles to come into this alignment February next year. But then, more or less, the full first half of 2023 looks like the cycles are turning upward again, which we've not seen this year. So, maybe an important timing opportunity, December, January, important market low in Bitcoin. From a timing perspective, please also add your technical analysis. So, just checking some questions here. Brent, I don't think the new version of the cycle analyzer has been released yet. Yes, it's from a visual perspective, you are right, but I'm really working hard to get it out before Christmas. So it's just a matter of some little tweaks here and there. It's more or less ready. So I'm showing here the beta version. So the productive version of our FSC version slightly has a different user interface. So the same features, some user interface visually look different. But Brent, my Christmas present is what I'm working on. I've not talked about possible Christmas presents, but I want to get it released to the public this year. So maybe between Christmas, latest New Year, this will be finished and set into production. It's more or less finished. It's just the testing which needs to be finished. Okay, so and then maybe based on your interpretation of cycle analysis, do you think Bitcoin is entering a price bottoming behavior? Yes, exactly. That's what I tried to summarize. However, the period from now into February, so it's not a short-term trading opportunity here, but from a long-term perspective, I think we have this bottoming behavior, which is from now into January. So from timing perspective, this is now really the point in time to move over to the technical analysis, because for sure we are not doing here any trade recommendation. You've seen the disclaimer in the intro, but now as you have this timing window with a clear projection, you could now fine-tune your technical indicators to see if they are in agreement with this timing projection or not. So use Elliott wave patterns to see if the bottom area also is confirmed by price movements. Use Fibonacci price levels to see if the current move down arrives at interesting price targets. Check oscillators with the length setting adjusting. You've seen I've used 180 days or 300 days. Use an harmonic of this longer term 180. So maybe divided by 2, you will divide 200 by 2, you arrive at 100. Divided by 2, you arrive at 50. So you can use an RSI tuning at 25 or 50, because it's an harmonic of 200 trading days. So use an RSI setting of 50 to fine-tune the oscillators if it's oversold or overbought on that level, or even use 200 in your RSI on a daily long-term chart. And this is now to use this cyclic knowledge on the timing also in addition to technical analysis. So that's what I said. Apply harmonic patterns and other technical analysis to see if you find a confirmation. If you find a confirmation of these patterns with the time-based projection, this is even a more valid signal. If your harmonic analysis or your technical analysis is in disagreement, then you should not use both in combination. At least you have no trigger or no signal here. Okay, so last but not least, let's have just a quick look at Ethereum. Just to complete maybe also the crypto analysis with a look here. So again, I use, in that case, it's a daily data series on Ethereum. By the way, here the spectrum is quite more interesting here from a cycle analysis point of view, because we have lots of peaks in the spectrum. That's quite different if you compare it to the Bitcoin daily, where we have had 1 or 2 prominent peaks in the spectrum I showed you on Bitcoin, while here we really have more than 1 peak to select, which are all very good and very, very nice based on our analysis. So we have some criteria which are important. They need to be separated in the spectrum, so clear peaks, which you can really see based on their, so the left-hand side and the right-hand side of these peaks really falls down sharply into these low areas here. So these 3 peaks are very nicely separated from each other, while sharp moving upwards from the amplitude, similar to these 2 here. And they have an high offset on the absolute amplitude. So, and it's not easy, but by having this view here in the spectrum, it's not clearly easy or from our procedure to decide now which one to pick out of these 1, 2, 3, 4, 5 cycles, which would fall into our criteria to select here. And that's now the reason we need to, or we can also use a different view. But first, let's start with the way and just check the cycles here. So we have here 227, 285. This one is 173, 195. So these 2 cycles are the ones I would start with. First, we had a similar cycle length of around a nominal cycle of 200 in Bitcoin. So maybe the closest is the 195. But we need to be careful. The Bartle score is very low. It's blue, and to be honest, it's close to getting reddish. So it means from a statistical significance, this is a very low score. and the strength is not as high as this one here. So we have better battles, better strength. I would see they are very similar to each other here. So that's the first cycle I would use here. And then as a second cycle, we could activate or deactivate the cycle here. And that's then, again, let's have a closer look here. Always the same procedure. Please check the projection by using just one cycle or both cycles. This is just the 173, projecting a low here in January and then an upswing into early next year. While adding the second cycle, the projection does not really change. Yeah, so you will see it while I switch it on and off. I mean, it's a short change here, but at least it's also projecting a bottoming area in January. And if you add the longer term cycle, it's end of January. And then an upswing into April, May next year. So here we have a similar outlook like we have in Bitcoin. So the major dominant daily cycles are projecting a bottoming area in January with an upswing afterwards, which is similar to what the cycles in Bitcoin told us. And just now to add another approach here for the cycle analysis. So let's clean up. As I said in the beginning, it's not easy to decide which cycle to pick here for a projection. You could also, without any knowledge of cycles to pick here, just build a composite based on these 5 cycles here. Yeah, we just now activate all cycles and stack up these cycles on top of each other. That's the projection which we will get if we use all 6 cycles here, which are activated now. If you see them here in the list of cycles, 1, 2, 3, 4, 5. They are now just simply selected by clicking on the peaks here in the spectrum. So that's the projection here. They are also coming into the bottoming area. And now the interesting is we can even extend it more into the future. Let's add some more bars so that the projection is going even longer into the future. Yeah, and that's now the combination of all these cycles really flattens out. So while you see here in the past, we really get nice swings out of all 5 cycles. So even in the past, this is the combination of all 5 cycles. While looking into the future, I mean, the main bias is what you see here. It's upward moving. So the main bias from even combining all these cycles is also confirming the bottoming area in January, or that at least the downswing should come to an end here, starting an upswing. But the combination of all these 5 cycles, at least into the April-May series, is sideways. But then adding with a stronger upward bias here. So it's not easy to interpret here the combination of the cycles. Another, and just for fun at this point here, we also provide so-called auto-composite features, which means that the cycle scanner automatically decides what combination of cycles to use. That's for the professional subscription level, so that's not the basics. So if you, just to reveal also, we have some professional features here, which allows you to make an auto-composite fitness out of the analysis. Will take some time here, and you see now it has selected 1, 2, 3, 4, 5 cycles, and you see them selected here. And this is now the projection out of the auto composite here, which you also see in the past, has a very nice correlation here to past movements, but more important is the future projection here. But here the auto composite also has the similar projection here. So doesn't matter if you just one dominant cycle, 2 dominant cycles, or even a composite just based on picking the top 5 cycles, or even using kind of artificial intelligence to pick the best cycles here, we get an upward projection for 2023 in Ethereum daily basis. So wrapping this up from the crypto area, and that's the point I want to make today, is that the long-term analysis using weekly cycles, which is now pointing up since October this year, taking into account the daily cycles in Bitcoin, which seem to bottom now February, March next year, and then having the daily cycles also in the upswing phase, getting into a cycles within cycles alignment between weekly and daily, which we didn't have this year. So that's interesting to see after February next year, which is also confirmed by looking at the daily cycles on Ethereum, giving the same supporting cycle analysis. So that's the summary for today, and just picking up some interesting question here. Could the projected upswing just result in a sideways movement like the time from May to November? Yes, that's more really looking into past upswing projections which resulted in sideways movements. But this is now something you should also take forward on your own, because I cannot complete it as we are running for 40 minutes now. If you reveal, and I think you can just move back in the video, the weekly cycle pointed downwards into October this year. And that resulted in the daily upswing cycles in a flat sideways movement. So as we have the weekly pointing down and the daily pointing up this year until October, we saw as in sum of both a sideways movement. So the long-term weekly cycle overruled the daily upswing cycle, which resulted in a sideways movement we see. Now the combination of both cycles are changing starting February, March, because both the weekly and the daily are pointing upwards. So therefore, I think until November or October, November this year, yes, that's exactly the behavior we would have expected. And that's why the upswing projection I did in January on the daily just resulted in the sideways movement, because of the longer term cycle still pointing downwards. But this is now changing in February, March. And that's why I would expect, just from the analysis we have now reviewed during the half an hour, I would expect this to change now again, starting in February, March. So therefore, we could see an interesting bottoming period now until February. And then we are back into an upward cycle, at least from the weekly and daily, which should maybe not result in a sideways movement, which should more result in a stronger upward movement here. Okay, so it is possible. You can save cycles on the analyzer, but that's something I would reveal to the professional packers. You can save cycles which you have did, and load these saved cycles then on the daily analysis, and then you can overlay them on the same chart. And then just the question, you mentioned the professional version. Yeah, we have two subscription levels at the foundation. One is the basic membership, which around 150, or we have always discounts at these events. So for example, if you subscribe to the financial event in January, so we are hosting another financial event for the yearly forecast in January, early January. If you and this is a paid event. If you pay this event, you already get a yearly subscription with this seminar, so it's more or less a discount to the 1 year membership. And then I need to look it up, but somewhere on our webpage, cycles.org, that's the webpage of the foundation, you will find a version, an analyst version. So it's listed as analyst version, which is the professional version I talked about, which has the auto composite and intraday data. Brand, at least a short hint where you can find this information. Yeah. Sorry, I just disabled the microphone, but it's always good to have the chat on the right-hand side. Thanks, Andy, for bringing that up. I'm not sure where to stop, but I will do a crypto long-term analysis in the January Financial Summit. So please join the January session. We will spend 1 hour on the crypto and Bitcoin asset. Next week, Monday, that's what I wanted to say. We will have, audio will come back. Yeah, so now audio is back again. Next week, Monday, we will have Forex, US dollar index, and US dollar versus euro in specific. So we will check the euro and the US dollar and the US dollar index starting with that. Focus next week. And the week after next week, we will have a look at the energy sector in specific to see what cycles in the energy might reveal. So I hope you have audio again. That's just the closing notes from my perspective. Thanks for joining me this week. I hope you are safe, healthy. Have a nice week. Please like, subscribe, comment, invite your friends, and then I hope to see you again next week, Monday, same time, same place. Otherwise, Thursday, special event on seasonality. Please join my colleagues on this channel here, and we will talk again next week, Monday.